Hi everyone, welcome to another Property Nuggets by NeezaNizam video series. Today we are going to touch about mode of financing when it comes to buying HDB, whether it's BTO or resale, right? So these two mode of financing is, of course, first is HDB loan, the other is bank loan. So in this video we will talk about eligibility as well as what are the pros and cons when it comes to taking either mode of financing. So stay tuned, we will get into it soon. Now let's talk about HDB loan. This is a unique mode of financing provision by the government of Singapore. So if you are eligible, means that you are Singaporean, your income is below 12,000 as a household, you are eligible to take HDB loan or HDB financing as long as you are buying resale HDB or build to order flat. Now the unique thing about this is the fact that it's a fixed interest rate for the longest time. Means as of today, the interest rate for HDB loan is 2.6%. There's no fluctuation, and it's fixed for maximum tenure of 25 years. HDB loan is a unique financing by the government of Singapore for eligible Singaporeans, especially when they are buying HDB resale or build to order flats, which means directly from HDB. Now, the unique thing about this is that it is a fixed interest rate for up to 25 years of financing. So as of today, the interest rate for HDB loan is 2.6%. Now, of course, there's eligibility criteria. Household income should not exceed 12,000. You should not have taken HDB loan more than twice. That kind of eligibility. But eligibility is something that you can read. But more importantly, I want to do the to highlight the pros and cons. Right. I just mentioned about interest rate. So it's 2.6%. Fixed over the tenure of your loan. So this is something that a lot of people see as a stability. Means that monthly I know that I have to pay X amount of dollars. There's no period of time where there will be fluctuation in terms of payment or interest. So this is very enticing for a lot of Singaporeans. But at the same time, what if you have taken more than twice HDB loan? So your option is, of course, bank loan. The financing mode is slightly different in terms of structure, but of course, comes to bank, there is always the component of cash. Means how the bank finance the property is a very simple structure: 5% cash, 20% CPF or cash, and 75% loan. Which means the bank can only finance up to 75% of the purchase price. Of course, this all depends on eligibility criteria, which is your age, your income, your credit status, and all that. So very important. The main difference, of course, besides the cash component when it comes to bank loan, is the interest rate. Of course, up in the market, various banks have a lot of different packages. As low as 1.5%, 1.6%, up to 2%. So there is, as of today, as we are speaking now, there is a lot of savings when it comes to taking the bank loan where interests are concerned. Which means that, just take an example. If the bank offers you a 1.5% interest for the purchase of your HDB flat, vis-a-vis HDB loan, which is 2.6%, there is a estimated 1% or 1.1% savings in interest over the X number of years. So you must understand from that perspective. We are looking at savings per se. In terms of interest payment, you have to actually look at what are the options available when it comes to bank mode of financing when it comes buying your HDB flat. Of course, both mode of financing allows the use of CPF. So there's no issue about you are not able to use CPF if you are using a bank loan. But more importantly, I think the 5% component of cash, which the bank imposes when you are taking loan from them. So this is something that you need to understand. The 5% cash is not paid to the bank. It's actually to pay down the property that you are buying, which is in the long run is a good thing, because you will be able, or rather you will be taking lesser loan. So important to understand from that perspective. Yes, my personal opinion is HDB loan is very enticing, very comfortable, because there's no component of cash, and HDB loan allows up to 90% financing of the HDB flat that you are buying. So you are allowed, or rather there's a bit more flexibility. Maybe you can push yourself to buy something which is a bit bigger house and all that lah. But more importantly, I always look at the numbers and the framework of payment. Whichever mode of financing you are planning to take, there must be a proper structure of payment. What do I mean by that? Very important, of course, as Singaporeans, we are able to utilize our CPF monies to finance our house, to finance the purchase of our property. So you need to be able to be wary about the pros and cons, because CPF is actually meant for retirement. So depend on the type of property you buy, or the age of the HDB flat, or the balance lease. So you must understand from that perspective, so that your CPF monies that you utilize to pay for the HDB flat do grow, in the mid to long term. Very important, right? Similarly for bank loans. So it's really a personal choice, and of course many homeowners or HDB buyers out there would prefer HDB loan because of the fact that there's no headache in terms of need to refinance, need to make sure that the interest doesn't go up too fast, too much, until it's not becomes unaffordable and all that. So it is very important to understand the mid to long term perspective of mode of financing. But those if you are less risk adverse, I think important to understand that if you're eligible for HDB loan, do take up the offer. But at the same time, the framework of payment is very important when it comes to your monthly mortgage payment. What do I mean by that? It's very important to have a bit of component of cash to your monthly payment, so that it does pay down your loan faster. Because why? CPF, when you use CPF for the payment of your monthly mortgage, there's always the component of accrued interest that CPF charges, right? So on top of your HDB loan, which is 2.6%, there is a 2.5% accrued interest charge when you use your CPF money to finance the mortgage of your HDB flat. So you must understand the mode of financing, the pros and cons, and what suits you best when it comes to buying that HDB flat. Of course, if cash is something that probably is not, you don't have enough, so the HDB loan is definitely a lucrative option. But then again, looking from a numbers perspective, as we speak today in 2021, the interest rate the bank charges are very much lower, or perhaps, if I may say so, one of the lowest in the history of bank financing in this pandemic era. So if you are savvy, if you are thinking of savings in terms of interest in the mid to long term, bank loan is an option for your purchase of HDB flat. So this is just my opinion based on my interaction and based on the transaction I've done, based on my 12 years of experience handling numerous HDB transactions. So if you have any questions, do PM me, and do like and share this video so that more people out there are able to benefit from our sharing. Don't forget to subscribe to my channel so that you are able to be empowered as much as we love doing this for you out there. So see you in our next video. Nizam Adli out. Bye bye.